What's going on, everybody? This is Travis Witherspoon from Carter Cow Capital. Carter Cow Trading on Instagram. Carter Cow Trade with Travis on YouTube. Everybody's doing very well. Before I end up going into the disclaimer and everything else like that, I'm actually about to switch that over. But before I hop into it, I want to make sure that I end up sending you a couple links before we end up getting started. I'm going to place that inside of the chat box on both of these overall links. So just give me one quick second while I end up doing that. It's cartercowcapital.com/start here. If you want to be able to hop into one of our free webinars that we end up hosting each and every day based off of people just saying that they want to hop inside of the webinar and just basically setting up a time to be able to do that. Copied that over to Facebook. Now we're doing it on YouTube. So let's scroll down to the chat box here. Okay, that's placed in on that. The next one will end up being the overall boot camp that we end up having. That's going to end up coming up September the 28th through October the 2nd. And very excited to be able to talk about that. Obviously, we end up doing this one time every month. This is for new traders that are interested in being able to trade, or people that are interested in being able to find that little edge, that small little thing that's going to end up helping them out when it comes down to the overall trading. Going from there, I love being able to talk to people, being able to get that started, because that allows them to be able to create the income that they so desperately want to create. So what's going on, say Chris? Hope everything's going well with you. So let's go ahead and hop into it. I'm not a CPA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to do for Forex trading. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So for the people that are watching me on Instagram, please make sure that you go to Trade with Travis on on YouTube. You can be able to see me from there. That's a live stream, so obviously you can be able to see my chart and go from there. Also, once again, for the people looking at this right now, first off, good morning. I do appreciate everyone being able to hop in. Obviously, it's 7 o'clock in the morning. Typically, I'm always up right around 2 o'clock in the morning, getting through all of my trades, and then after that, try to get a little bit of sleep. Never happens, but I always try to. And then after that, we wake up at 7 o'clock in the morning to be able to do this each and every morning. And then after that, obviously, I have class and stuff like that to be able to go from there. So what we're going to end up doing here is trying to see if we can be able to find some trading pairs and be able to go from there. It's been a great morning. For the people that was inside of my boot camp class, if you would, or inside of my master class and everything else like that, obviously, we've seen a lot of profits this morning. Done went over $2,000 for its overall profits. Done had my single most gains when it comes down to most of my trading pairs. And quite frankly, we still have a lot more room to be able to make some money off of it. Just have to be able to be patient to allow it to be able to go. So if you're interested in being able to learn how to be able to do so, make sure that you hop into this month's 5-day boot camp. It's September 28th, October 2nd. The link is down at the bottom at Believe Bootcamp, bit.ly/Believe Bootcamp if you want to hop into that. Now, with that being said, let's go ahead and hop on to the economic calendar and see what's a little bit later on today. What we're going to end up seeing is Chair Powell going to end up testifying. Typically, when Powell starts to speak, the market starts to move, and that's going to end up happening right around 10:30. So we see that the market has started to retrace a little bit from our overall positions, just because the dollar has been so strong with this interest rate decision that we have to be able to pay attention to going forward. So that's going to end up being the things that we're going to see. That's not going to happen until the Asian session, so that's going to be sometime right around 10 or 11 o'clock tonight Eastern Standard Time. So pay attention to that. Other than that, aside from 10:30, it's going to end up being a trader's day. So that means that obviously looking at the charts and being able to go based off of the charts will end up being the best route, best plan of action. See, basically, we pretty much closed on all of the positions that we end up getting into currently right now. Very close to that $10,000 number. I actually got a little bit greedy when it came down to certain positions, and so we're close to where that number is going to end up being. Quite frankly, that's been that I've been talking about with y'all for a while, and being able to have that buying power, how it can be able to change, how it can be able to change our account. So we'll get into that a little bit more, but let's go ahead and go through it. So let's take a look at the big three for this overall pair. That includes adding the Yeah, let's take a look at the big three. Be able to go from there. So currently, right now, let's see what we have. We look at this overall movement. Finally, the market has broken out. Um, it started to have that move yesterday. Yesterday was a very good bullish day. It was a decisive action when it came down to that move, but it was a breakout. Now, typically, once again, what happens is this: when you have a breakout, you have a retest. And by having a retest, and that means that the market is going to end up going down and it's going to test this overall candlestick formation that was made right here. So we see that this market has had a breakout of overall position. Now we need to be looking for low prices that's going to end up covering the middle portion of this body of this candlestick. As long as this candlestick does not get fully engulfed and breaks this overall trend line right here to the downside, then that means that we're going to end up being good, and we should see some overall movement towards the upside and continue looking to be able to buy as the market is going from there. So that's the biggest thing that I want to be able to take a look at from the in the first standpoint. Now, the next thing that I'll end up looking at is this. Based off of the 2-hour, if we can be able to see what's going to happen and see if we can be able to get a low price. Because we see that this market ended up having this large low hammer wick that ended up pushing up at 3 a.m. Then after that started to push back down. Currently, right now, what I would end up looking for is that if we can try to find a 2-hour counter trend line break towards the overall upside, once the market is in the buy zone, then I think that we'll be in a very good position to be able to start looking at buying. Currently, the market right now is in the buy zone, but we do not have a counter trend line break. So I will wait for a trend line break on the 2-hour somewhere around right here. Once it starts to push back up, then after that, then you have your trade to be able to take long term based off this overall movement. And then after that, you should be good to go for this overall trade. It's still showing a head and shoulders pattern. I'm sorry, it's still showing a crown pattern. So with that being said, I do like this overall move to the upside. I think it's going to end up being very strong once people see that they can be able to get a low price. I think the reason why people were not buying it at that particular point because they seen that it was a little bit overextended. Now they wanted to wait for their turn. So obviously that's the biggest thing right now. We're trying to just try to see if we can be able to get a low price to be able to get back in, be able to go from there. You're going to have to monitor the charts on this one because the market's going to move pretty quickly when it does break out because the market is entrenched inside of the buy zone. Now, same thing with oil. Remember, we talked about that transition period between how the dollar is going to end up start going into strength and how oil is going to end up start going into weakness, which meant that if you looked at a pair like the U.S. Canadian dollar, then you will end up getting a very good trading opportunity. That's what we end up doing a little bit earlier today, being able to make, how much did we take off? 101, 371, and 210. So let's say that's 210 plus 371 plus 101, about $682 of the I think the 2,400 that I think that we can be able to make overall based off of this movement. So we're still in a very good position. The thing is now we're just trying to end up getting once again a high price to be able to sell again. Now the best thing about this market is that now it's definitely inside of the sell zone, which means that the next trade that we end up taking, whether it's the 2-hour or whatever trade that we end up taking at that point, will end up being a solid trade toward the downside. Now, what ended up happening was this: the market ended up giving a trend line break, and then after that made a new high. Now, with it making a new high, we had to adjust our overall trend line right here and place it on the bottom of those wicks. By placing it at the bottom of those wicks, we can be able to see when the counter trend line break happens. If we end up getting a full close of this candlestick from this overall area, now you have a trade to be able to take. Stop above this one, if you're trading oil by itself, will be above 40.50. So I would say like 40.55 just as a overall stop from that overall area, giving you an opportunity to be able to have a very small risk to a very large reward when it comes down to trading. And obviously that's the name of the game when it comes to trading in the first place. If you want to lose, you want to lose very small. If you want to win, you want to win very big. So overall, that's the overall game plan that we're looking at. We'll look at being able to place a stop above 40.55. I'm going to place that right here. And then after that, take profit right now because it ended up hitting the blue zone. That means that the D extension will be at 38.15. So 38.15 will end up being the new take profit area. Market ended up hitting the D extension before, so yesterday. So that's a good move. And overall, 40.55. New take profit from a 2-hour perspective will be 38.15. Right, and we'll go from there. So there goes the trading plan when it comes down to oil. Now, remember, if we're looking at this, we're probably seeing the same thing when it comes down to the U.S. Canadian dollar. So we have to keep that in mind when it comes down to this trading pair. Now, let's take a look at gold. Gold ended up breaking this triangle to the downside. Remember, we ended up talking about how if the United States dollar was to start going in a strength, that means that when this market will end up breaking out towards the downside. Now, once again, typically once you end up having a breakout, you end up having a retest. Now, this retest has already started to happen when it comes down to gold towards the downside. So you should see that the U.S. dollar should start getting into strength against the Japanese yen on a certain amount of pairs, right? That also means that if you're looking at pairs like the Australian dollar, right, that's another, because Australia is the second largest producer of gold, you should see that pair should start to be a little bit weaker as well. So if we're looking at this overall pair at this particular point, we have this ABCD swing that has not been completed yet. The extension will be at 1835. We do have a counter trend line break at this particular point, and the market is very close to the sell zone. There is a trade to be able to make right now. If you were to get in, just know that you have to be able to place your stop a little bit higher. I will place my stop inside the overall triangle if I'm going to end up making any type of move at this particular point. My stop will probably end up being somewhere probably right in the middle body of the triangle, just to give yourself a little bit of room. It cannot be above the A because it's inside of because you have a triangle move. Because the market is in consolidation. So the consolidated move doesn't matter. Not gonna. You do that, then that means that you're letting the market go back inside of consolidation. Go from there. So I'll place a stop at 1940 as a overall position. That means that you need to lower your risk if you're going to end up trading this from a gold perspective, which would be about 342 pips, but you're going after 710. So it's a 1 to 2 risk reward ratio. Not the greatest risk reward, but it is a good trade. Able to get it at that particular point and go from there. Now, this is one of those trades that I actually ended up taking a little bit earlier this morning. So if you are interested in being able to trade it, there is some more room to the downside. Remember to take profit at this particular point. It's 18.5. Moving forward, let's start taking a look at some overall U.S. based pairs. Now, I am interested in being able to take a look at what happened with the New Zealand dollar, because the New Zealand dollar actually ended up making a move to the downside a little bit. Ended up making that same movement to the downside, just like the Australian dollar, just like the Canadian dollar, and just like the U.S. Swiss franc. But it ended up making it a little bit later than everyone else. So that's going to end up being a pair that I'm kind of interested in being able to look at. But we're going to start off with the Australian dollar because this is the first pair that actually ended up showing up. So let's go based off of what we know. I'm going to get rid of this. I'm going to keep that same candlestick formation. We have to still be able to talk about that because that could still necessarily happen, but we need to focus in on what's happening for me. On the weekly, the market has broken the trend line to the downside. On the daily, the market has broken the trend line to the downside as well. That means that you have trade alignment. Anytime you have trade alignment, then you have a solid trade to be able to take. So what we're looking at when it comes down to this move, for the first swing of this move, we expect that the market is going to go down to 70.55 for the first break of this overall trade. But we're starting to see that the market ended up finding a little bit of support when it ended up breaking past this overall support level where the first portion of consolidation was at when we lost on that first trade, when the market ended up breaking a new high last week. About a few weeks ago. So it's turning past support into, past resistance into new support. We can see that right now we're starting to make a little bit more of a hammer or an indecisive type of move right now at this particular portion, at the starting portion of the day. Doesn't necessarily mean that it's going to stay that way. It just means that right now, if you look at smaller time frames, you could probably be able to get a better trade, and you want the market to be able to move up towards that better trade area to be able to get in. Now, what we want to focus in on is the 2 hour and see what's happening on the 2 hour, because typically that's where we make most of our trades at. All right, so based off of that overall movement and being able to look at it from that point, remember, our first trade that we ended up taking was right. Our first trade that we ended up taking was right here. We had very low risk to very high reward. The stop was at 73.55. The extension was at The D extension was at 72.36, and the market ended up blowing past that and ended up completing that. Now we're on a new swing of this overall market right now. Now, what ended up happening was this market ended up hitting this D extension, started to pop back up, ended up hitting the 236, and then after that started to retrace back down. Now remember, when that happens, that's more of an 80-20 rule that ends up happening from there. Don't know what an 80-20 rule is? Obviously, hop inside of our boot camp, something that we end up talking about a lot. Typically, you end up seeing a lot of resistance right around the 107%. Market starts to move at that particular. All right, so from here, what are we looking for? One, we want to be able to see if we can be able to get a high price. What determines a high price? If you look at the stochastic, if you see that the market gets into a overbought area, which will be right around the 90% gauge, and anytime that you see that the market gets around that area, you should see the market should start to drop a little bit from that overall position. Next thing will end up being, okay, can we find a break to the downside? Find a break to the downside, do we have a trade to be able to take? Hypothetically, yes, when you're looking at this overall pair. So currently what I'm looking for is this. I see that the market has the opportunity to be able to push up. Once it ends up pushing up, obviously I would love to be able to catch it inside of this sweet spot area, which will end up being, which will be anywhere right around the 73, anywhere around this area right here. And what I need to do is actually make this one lighter. We can get this trade anywhere between the 72.82 area, the 73 area, the 73.14 area, then that end up being great. Now, the reason why we got out of the trade on this last one was because that one, we did hit a D extension on the 2-hour, and two, because we ended up breaking a counter trend line break towards the upside. Instead of holding the trade, that's a standard lot, that's $10 a pip on this overall move. Then what I ended up saying was, okay, well, let's go ahead and cash out. Let's go ahead and make our money. Ended up making $1,000 on this overall move. Think about this. This was a day and a half of trading. You made $1,000 in a day and a half of trading. And literally, that is clicking a button, going to look at the computer, and seeing that the market is still moving, and then going from there and getting out of it. I think the market moved as much as 140 pips, which would have been right around $1,400. I took my eye off the ball and actually ended up missing out on $1,400, but I'm not gonna cry about being able to make $1,000 in and with one click, with no shoes on, no 9-to-5 job, no anything else like that. Not gonna cry about that one. So if we're looking at this overall move now, the next thing will be, okay, let's see if we can be able to get a high price, and then after that, be able to break down from there. The best thing, the one thing that I will be looking for is, where can we get in at? Okay, that's the most important part. And typically, what you can be able to do is start to look at volume profile to kind of get an idea about where the market is going to end up moving. I think that we have a strong area when it comes down to this 2-hour D extension at 72.75. 72.75 at this particular point, we go back and take a look at the chart. 72.75 is right around the 618 area. So 72.82 will probably end up being that strong number. 72.75 is a point of control. I take points of control very seriously. 72.75 will end up being the number where the market could possibly go at this particular point before being able to move up. Now, you could see a little bit of resistance at 73.36. The market did hit 73.36 and start to push down. If we see that the market ends up breaking above the 73.50 area, then you might as well put it at 72.75. It's almost a guarantee that it will go up that high if it breaks above the 73.50 area. So that's what I'm paying attention to. I would love to be able to get inside of that area and make a new trade from that particular spot. I think that will end up providing a lot of value for us being able to get in that particular area, and then after that being trade down towards the extension, which will end up being that area. Quick, a little bit of housekeeping. Got that. It goes on crackle right here. 75 is right in the middle. And get rid of this candlestick right here. There goes our new move right there. All right, so this move will actually end up going down to the D extension at 71.11 or 71.15. which means that more than likely it will probably end up hitting the D extension or start moving toward the D extension at 70.55 once that market ends. So the question would be, well, should I buy at this particular point? Hypothetically, you could. I wouldn't necessarily say it will be the best trade to be able to take unless you're scalping the market. If you are scalping the market, then go ahead and take that trade. If you're not, then I would wait for the market to be able to hit this point of control, 72.75. I will almost be at a point to where I might end up putting in a pending order just so I can be able to place in this trade and get away from the computer and allow the market to be up there from there. But if that does happen, take profit area. Go back to the daily move where we talking about is 70.55 and keep on moving towards the overall movement where we think the market is going to eventually go, which would be about 6,600. All right, so there we go. There goes the trade plan with that one. Right point. Point of control is at 72.75. We can put in a pending sale. I can spell pending sale right. Pending sale area well trading at that particular. All right, so next one, let's take a look at the Australian dollar, US Canadian dollar. US Canadian dollar, what has happened is this. Market ended up breaking the trend line towards the downside from here. Broke out of this triangle that we were looking at for a while. This market ended up already having an ABCD swing. It actually ended up hitting that ABCD swing and then breaking from there. Now, currently, right now, what we're looking at is this. We've seen that this market ended up giving us a lot of support right around that area. We end up getting in all of our trades below 1.31 from that particular position. Now, with this market end up breaking up 114 pips at this particular position and hitting the D extension at this spot right now, we're probably going to end up seeing that this market is going to start to retrace. Now, I don't think it's going to retrace as much as we actually think from this overall move, because the U.S. dollar index, as long as it's strong, is going to keep on moving, and as long as oil starts to get a little bit weaker, then we should see a move toward the upside. Now, originally, I was looking at being able to get out at 1.3380 as a overall position. That was a point of control position for us being able to get out, and it is a D extension from this overall 2-hour move. So what I would end up doing is this, if I was you, we can do a couple things. One, we can look at being able to buy once we end up having a counter trend line break towards the upside. I think that would be a very safe move. We have been seeing that happen a couple times. The market is getting close to the buy zone. Doesn't necessarily mean that it's going to end up automatically breaking out, but it is very close to that overall area. From here, if it does break out, this would be considered an R3 trade. So that means if it is going to place our stop just below the overall swing low at this particular portion, and then after that, look to be able to buy up to 133.89. From here, I think it's probably going to end up having a deeper drop. The reason why I think it's going to have a deeper drop is because the daily D extension has been hit, but it has not retraced as of yet. The overall position of where we're trying to go is 1.3580. Once again, we're trying to take our profits while we're going up to that particular position. We know how much we are trying to get, but we just need to know. But we definitely need to make our money while the market is actually moving that particular position. But currently, right now, there's no trade to be able to take until we end up getting a counter trend line break. Once you get that counter trend line break, place your stop just below the swing low. Then after that, take the trade from there. Hopefully that makes sense. All right, next one, let's take a look at the U.S. Swiss franc. U.S. Swiss franc, we have been trading, and we have been seeing that this market has a little bit of consolidation around 91.80, and has 2-hour consolidation right around 91.60. We actually end up getting out right around the 91.60 area based off of this trade, just because of the consolidation that we had, and because the little bit of movement that the U.S. dollar was showing for its weakness. Remember, I think the move will probably happen to the upside right around 10:30. Why do I say 10:30? If you look at what's going to end up happening for us overall people talking, remember, Chair Powell ends up talking right around 10:30. So if that happens, then if he says anything good about the market a little bit later on today, you should see that the market will start making a little bit of an upside movement. Remember, this is day 2 of the market actually being truly bullish. So you should see a movement, you should see a breakout when it comes to that move. That's what we're paying attention to. That's what we're interested in get in now. All right, so 2-hour, where are we at? Look at the 2 hour. This market is still considered to be consolidation. With this market still being considered to be consolidation, currently right now we're in a consolidated no trade area. If you like the trade, I will look at a counter trend line break if you have to be able to get into this trade. Right now, I'm a little bit more hesitant on this trade than any other of the ones that we just profit off of. But if it does break toward the upside, I will wait for a counter trend line break towards the upside, place my stop below the swing low and keep it very tight. Know that the market could get to 91.80 and start to break down, but if it doesn't, then that means that you're going out to 92.30 for a overall position. We look at point of control in action when it comes down to overall trading. Once this market hits the 9200 area, it's going to blow through 9200, and then after that go to 93. There has been proven research to be able to show you that there is less trading right around the 9200 area once the market actually ends up breaking. We actually notice there's not that much trading. There's not that much trading around this overall area. We see light volume around this overall area for us being able to get in. So anything above 92 with a retracement, any type of break like that is going to 93. I don't think I need to look at fibs or anything else to be able to say that I can trade inside of this pocket and be able to go from there. I think that this is a solid move or a solid area to be able to trade at right around this overall area right here, being able to get out in that area. So I'm looking for a trade toward the upside. You can see that the stochastic gets getting close to the buy zone again. Once again, counter trend line break toward the upside, movement toward the upside. You have that break, and look at being able to trade towards that area. If you want to be a little bit more sure about the trade, what you could be able to do is this: you can allow the market to be able to break out of consolidation at 91.80, retest. Then after that, break from there. But if it breaks out, it's going to hit the D extension first. So just know that. Typically, when you have a breakout, the breakout ends up hitting a overall D extension with or retests and goes from there. Right. So that's what we have when it comes down to that pair. Last pair of today is going to end up being the New Zealand dollar, United States dollar. Once again, I'm very interested in being able to look and see what happened with this overall move. We know that we had a break. I think the break was 100 pips from that overall movement. We was talking about the New Zealand dollar, Japanese yen for a while too. And man, that ended up mad that I missed out on that one. That was a 3. That was a 3. Good move. Let's see. New Zealand dollar, United States dollar. We go to the daily. Let's look at the daily first. All right, let's look at the weekly first. Look at the weekly. Market is on this trend line, breaking above for this move right here. We have a candlestick that is starting to break to the downside. So this market is still considered to be bullish. But this market is still considered to be bullish. We will have to wait until the end of the week to be able to make a trade in this position to feel very comfortable with it. So this market can be proven to be bearish at this particular point. Right? That's the reason why we didn't trade it earlier during the week. So we have to keep that in mind. But let's, with that being said, that means that there's no trade to be able to take right now. But go to the daily just for giggles. We can see that this market has broke this overall move. Remember, anytime of where this market could potentially go, we go back to what happened with the overall crown movement of this area. Crown movement of this area was right around this left tip for this movement right here. So I think that the market could fall right around the 63 area for the overall drop. Look at point of control, you'll probably end up seeing the same thing for the overall movement. But I do expect that the market is probably going to end up falling down to the 63 area once this market starts to fall. That's 400 pips of overall opportunity, $4,000 for its overall opportunity, depending on how you end up trading it. For its a lot size, $4,400 or $40, depending on how you end up going from there. Now, from there, we go to the 2 hour. We can see that this market has this large break, looking for a 2 hour high to be able to sell. I would not look at trying to get in at any point right here on this false break. And you can tell those are false break of movement because the market hasn't retested yet. Remember, breakout, retest, always the rule that you need to pay attention to. The market this moves without trying to touch this overall area. More than likely, it's going to end up being false. That's what ended up happening for that. All right. So with that being said, that is my time for today. I do appreciate each and every one of y'all being able to hop in on the charts and being able to look and see if there was any other trading pairs. Obviously, we just talked about how we just made over $2,000 for its overall profit. We are out when it comes down to that overall spot, but that it means that we do have a green day when it comes down to trading. It's always good to be able to show that on the screen right there. Once again, one of the largest trades that we end up having, or largest trading mornings that we've had ever. It comes down to that, and very close to that $10,000 mark that I've been pushing for. Understand this: anyone can be able to trade. Trading is hard, but anyone can be able to trade. You end up putting the work in and start this grinding and learning something that you can be able to do that is simple and repeatable. Then after that, anyone can be able to make money for Forex trading. Understand this: not a genius by no stretch of the imagination, but I do understand people and I understand how to be able to read the charts now. And it took me almost 3 years of not being able to make money to start being able to make money. So it takes a little bit of time to be able to learn that. And the reason why I end up doing boot camp classes, the reason why I do my master class classes is because I end up having my aha moment. And I've been at a point to where I can be able to help you be able to learn faster and be able to make money faster than when I end up doing it. So once again, if you're interested in being able to learn how to be able to Forex trade and be able to go from there, we have a 5-day Forex boot camp. It's going to end up going September the it's going to end up being September the 28th to October the 2nd. It's going to be from 9 p.m. It's only going to end up being $15 a day. When I started and I end up paying my overall investment, able to learn my education and everything else from the technical path that I end up doing, it ended up costing me over $5 grand. So keep that in mind. I'm doing it for literally $80 and being able to teach you everything that I end up learning for $5,000 just to be able to go from. So that's one of those things to be able to go for and to get yourself situated. But like always, one of my sons ends up popping in right before the end. I'm going to make sure that he ends up saying hey before we get out of here. Here we go. This is Mason. This is Mason. Say hey. Say hey. Say hey. Make sure you wave. Wave. All right. So I see each and every one of y'all tomorrow. Make sure you believe in yourself. Change will end up coming. Like always, plan your trade.